A bank reconciliation statement, BRS, is a statement that a company prepares on a particular date to match the bank balance indicated in its cash book with the balance shown by the bank's passbook. The statement displays the reasons for the differences between the two. A bank reconciliation statement is a summary of banking and business activity that reconciles an entity's bank account with its financial records. The statement outlines the deposits, withdrawals, and other activities affecting a bank account for a specific period. A bank reconciliation statement is a useful financial internal control tool used to thwart fraud. For example, ABC Holding Company recorded an ending balance of $480,000 on its records. However, its bank statement shows an ending balance of $520,000. After careful investigation, ABC Holding found that a vendor's check for $20,000 had not been presented to the bank, and a $20,000 deposit made by a client was inadvertently omitted from the company's records. Therefore, ABC Holding adjusted its records, noting the check as outstanding and adding the missing deposit. Reasons why the bank statement and the cash book balance may disagree. 1. An unpresented check simply means that a check has been written and accounted for, but it has not yet been paid out by the bank from which the money is being drawn. Unpresented checks are also referred to as outstanding checks because the funds in question are, as the name suggests, outstanding. Unpresented checks are the checks which are issued to a person and she has not presented it for payment. In this case, the cash book is credited by the check issued and passbook is not. So the cash book balance is less than passbook, hence unpresented checks are subtracted from the passbook balance. 2. Uncredited checks. Uncredited checks are checks received by the business that are recorded in the cash book but are not recorded in the bank statement. For instance, the firm's records a receipt in the cash book from the bank paying-in slip. 3. Dishonored checks. A check falls under the dishonored category when a payee cannot successfully deposit the payer's check. A payer is the one who issues a check to the payee. The payee deposits this check in the bank. If the bank refuses to pay the amount mentioned on the check is dishonored. 4. Bank charges or fees banks deduct for the services they provide, such as performing transfers, exchanging currency, running an account, assessing a loan, issuing a credit card, etc. Banks may also charge for substantiated costs incurred with third parties when providing the services requested by customers. 5. A standing order is a regular payment of the same amount that's paid on a specified date. It allows the bank to take money regularly from your account to pay another account. You can use a standing order for many payment types, including transferring money between your accounts,